And if we move on to the markets in West Africa, we see a mixed picture, particularly on Friday, where the NSE ASI index was down, and we saw some of the other major markets moving higher. The NSE ASI index was down to 36,164 points. That's down about 80 basis points, really on the back of the losses we have, the volatility we've really seen over the last couple of weeks. The NSE ASI index did seem to be recovering at some point last week, but then of course it did end the quarter and of course the first half of the year on a negative note. Indeed, it's up about 29% for the year. So let's now cross to the Nigerian Stock Exchange, where OkomuOil, head of research at FSTH Merchant Bank, will join us for a conversation around where this market is headed. But Ayo, before we move on to where the market is going, maybe we should just review the first half. I think very interesting, the dynamics we're seeing. I think one thing that stands out for me is the performance of the banking sector. The banking sector, of course, is where a lot of people tend to invest in this market. But if you look at its performance in the first half, not too fantastic, really. It's just up about 20%. So underperforming the market, the big question is whether or not it would underperform in the second half. What are your thoughts?
Thank you very much for having me this morning, Wally. Like you said, yes, the banking subsector did not perform well as much as the broad market, the ASI index, in the first half of the year. Like mentioned in one of the earlier shows, that what investors actually did was that they didn't actually think that the performance, the recovery we are seeing in that sector is sustainable. And that was why they took advantage of going into the risk sector of the market, the manufacturing sector, the like of WAPCO, the likes of Nigerian breweries, DangCem, Nestle, that are currently trading beyond fundamentals. But going forward in the second half of this year, we've seen a lot of improvement, and we're continuing to tell investors there are a lot of opportunities in this sector. Loan growth is going to be very good, higher than what we have last year. The Q2 report that we're expecting in July from across the companies in that sector, we think is going to be an improvement of our Q1 report. And as investors begin to see this result, and I think they will have improved confidence in this subsector, and therefore I think funds will likely flow into this sector, and therefore we expect that the sector will perform higher than what the NSE ASI index will do in the second half of the year.
So if as an investment strategist, I should be looking at the banking sector, overweighting in that space. And if that is the case, which stocks in particular do you think are most interesting?
Most of the stocks in that sector are currently undervalued, but specifically investors may begin to look at, in the short term, may begin to look at companies that may likely give interim dividend, the likes of Access Bank, the likes of GTB, that historically give interim dividend. But beyond that, investors who are looking at taking advantage of the low prices in the sectors to buy in should look at the likes of the leaders in the sector, the likes of First Bank, the likes of, First Holdings, now FBN Holdings, sorry, the likes of Zenith Bank, the likes of GTB, the likes of Diamond Bank. I think Access Bank also and Sky Bank have opportunities and growth potentials in that subsector.
All right, and if we move out of the banking sector briefly, let's move on to the consumer names. You just mentioned a point about the valuations of quite a few of them being pretty rich right now, but some others will argue that it's all, some argue that some of those stocks deserve a premium because you're buying into the Nigeria growth story, the consumer story, etc. So do you buy that argument?
Well, at a point, investors will begin to revise their investment strategy and think about buying a stock at about 32 P ratio, and as against the banking sector, which we talked about earlier, in single digit at the moment. I think that at a point, we will see a situation whereby investors will no longer be buying all the stocks, will not be comfortable in buying them. That sector, yes, the volatility in the manufacturing sector and other consumer goods is low, as in lower than what we have in the banking sector. But then investors will not continue to buy these sectors, the stocks in this sector very shortly, because the earnings, their potential is low, PE multiple is quite high at the moment, dividend yield is quite low, and I think that funds will move away from that sector very shortly to the banking subsector.
But if we look further, looking at the things that could define the second half of the year, a few themes for me are striking. One, of course, is the Naira, the volatility there, and the impact it could have on even company performance. Then, of course, there's the foreign investor behavior, and is anyone's guess where that is going. And then I think, of course, earnings. So when you look at several factors going forward, which of them do you think is probably going to define the second half the most?
For me, I think if you look at the Naira, the foreign exchange strategies the Central Bank is currently adopting, the managed flow strategy, I think to a large extent we can see stability in the foreign exchange market this year in terms of the foreign exchange, the rates against the US dollar.
You think that we're going to stay at about 162.50, which is where we are now, or you think it's going to strengthen?
I don't think that the numbers from the official rates, apart from the 1% premium, will go into the region of 162 Naira to $1. The Central Bank has said 155 plus and minus 3%. So that's about 160, 159.5. So that's the region, I think, the highest that we can get to second half of this year. And our forecast actually 158 to $1. Yeah, but I think...
Okay, go ahead. Because I think you're making an argument for the official rate, but then the interbank rate is where a lot of people get their dollars.
Yeah, people get dollars from interbank rate, but then if we are looking at the benchmark rate, we look at the official rate. Well, if you look at the interbank market, we have a little premium, maybe 162, but the official rate in the region of 150, 159 to end the year. But I think in the second half of the year in the equities market, I think that this Q3 will be defined by Q2 earnings and the expectations of Q4 earnings, and the fact that the undervaluation in some stocks in the market. These are what I think will likely drive the equities market in the second half of the year, not really the foreign exchange rate volatility.
What's your take on Dangote Cement? It's the big one. Is the big one on the market. Where do you think that stock is headed?
I think the fair value of Dangote Cement is about 210 Naira per share.
So in other words, it's cheap right now. You think one should buy?
I think it's cheap at the moment. It has some upside potential at the current level. You look at the growth potentials and the investment the company is currently making, and the fact that it can account for about half of the market share. And I think that there are a lot of opportunities for that stock to appreciate beyond the current price.
All right. What about some of the companies in the agri space, the likes of Presco and OkomuOil? We don't talk that much about them, but then again, I think in the context of the high prices that we're seeing for many of the consumer stocks, some people may be trying to diversify and perhaps pick up some of these stocks. What's your take on those? The
issues we have with the likes of Okomu, prior to now, it has about less than 1 billion shares in issue. But then it gave about a dividend, a bonus of 1-for-1 in addition to the 7 Naira dividend it gave last year. Going forward this year, we don't see so much of upside potential in that stock. The price went up as high as 100 Naira per share on account of the 7 Naira dividend they gave last year and the dividend bonus of 1-for-1. But then we don't think the the stock has so much upside potential. Yes, government policy in favor of that sector, in favor of agriculture, is into oil plantation, is into rubber plantation also. But then there seems to be low downward trend in the commodity price across the globe, which of course will impact on its operations this year. So, but for that stock, I don't think that the price is more than at the current level, given the fact that it has given 1-for-1 bonus. The fair price is not more than about 56 Naira per share. So I don't see much of upside potential in that stock. The same thing with Presco. Right,
okay. If we move back to another factor that I didn't mention, the fixed income market. We just had a conversation with Akindaudu, the Chief Operating Officer at Citi, to get his thoughts on where that is headed. And of course, we know that that market impacts the equity market as well. How worried are you about where fixed income yields are right now and the impact that that could have on equities?
In the last few weeks in the market, the rally we've had in terms of yield in the fixed income market has actually had negative impact on the equities market. But we are of the opinion that that's just a temporary issue. Very shortly in the next 1 or 2 months, I think that that trend will reverse itself. Nigeria has very strong economic fundamentals that will not allow yields on federal government bonds to be trading at the current level of 14 yield to maturity. I think it will go back into about 12% yield to maturity in the next few weeks. And of course, announcement by Ben Bernanke about the possible hand to quantitative easing in America has really impacted on that fixed income space. I think that as soon as yield begin to come down, price begin to appreciate, fund will find its way down to the equity segment of the market that are currently undervalued. I think that inflation outlook in the remaining part of the year is quite favorable, saying good digit. We're going to have lower than even what we had in first half of the year. This will also have some little impact in how fixed income market will be trading in terms of impacting downward trend, which of course will have positive impact on equities market in the second half of the year.
All right.